Welcome to Explain the Charts. Today we're tackling the SPY, the S&P 500 index. Recent news indicates a period of market volatility, triggered by Federal Reserve actions. Let's see how this translates on the charts. Examining the daily chart, we can see a recent price drop around December 18, 2024, potentially signaling bearish sentiment. The volume associated with this drop seems significant, potentially indicating strong selling pressure. But note the slight bounce immediately after. Let's take a closer look at the hourly chart. The hourly chart shows more detail on that recent drop. The candlesticks tell a story of increased volatility around specific times, possibly due to breaking news. We can also see signs of support and resistance levels at key price points. Now let's zoom in on the 15-minute chart for even finer details, especially around that December 18th sell-off. Here, we can observe precise short-term price fluctuations and identify potentially significant candlestick patterns during times of high volatility. Looking back at the bigger picture on the daily chart, we observe a longer-term upward trend that's recently been interrupted. While the short-term outlook may be bearish due to the recent sell-off, the overall trend remains interesting. This dynamic suggests that a short-term correction might be underway before the longer-term upward trend resumes. If we observe increased volume in conjunction with a break above the resistance level, this would support a bullish outlook and suggest that the upward trend is set to continue. Alternatively, if we see a continuation of the recent negative trend with consistent high volume, that would suggest a bearish trend. Key price levels to watch on the daily chart include the recent low around 586, which is acting as potential support. Resistance lies around the recent high at approximately 608. A break above 608 could lead to a significant price increase. On the hourly chart, similar support and resistance levels exist. These levels are dynamically changing, so it's important to watch them closely. Combining the hourly and daily perspectives might give us a more nuanced and predictive forecast. The 15-minute chart provides critical intraday signals. Watching these very short-term fluctuations can inform immediate trading decisions. Remember, these are high-frequency data. Any analysis should be combined with the broader picture. In summary, while the recent news and short-term chart patterns suggest a bearish trend, the longer-term upward trend should not be ignored. The likelihood of a short-term recovery is moderate, contingent on sustained volume increases accompanying a price move above the 600 level. Conversely, a sustained decrease below the 586 support level would point to a more bearish outlook. Important levels to watch: support near 586, resistance around 608. Watch volume changes closely to reinforce the direction of a break at either level. Upcoming economic indicators and the general market sentiment will also heavily influence the SPY's future movements.